This year, gold miners have done something remarkable. After a decade of underperformance and investor skepticism, precious metals mining stocks are suddenly the market's quiet overachievers. From Toronto to Johannesburg, from Nevada's Carlin Trend to Mexico's silver belts, the world's miners are back in the spotlight. And here's why. Gold is trading near $2,550 an ounce. A record high silver, around $33. Even platinum and palladium are ticking up again after years of decline. But it's not just the metals that are shining, it's the companies behind them. The NYSE Arca Gold Miners Index is up 45% this year. Juniors in the GDXJ ET up more than 55%. It's a rally built not on hype, but on discipline. For years, mining executives promised investors they'd control costs, pay down debt, and stop chasing marginal projects. In 2025, they finally delivered. Take Agnico Eagle Mines, up 42% year-to-date with all-in sustaining costs around $1,420 per ounce, or Pan American Silver, whose silver equivalent output is soaring on the back of industrial demand from solar energy. Even royalty and streaming companies like Royal Gold and Franco-Nevada are outperforming, proving that lower risk exposure to gold and silver production can be just as rewarding. But the real story runs deeper than numbers. In a world of rising interest rates, political instability, and digital currency debates, investors are rediscovering something ancient: trust in tangible value. Central banks have bought over 400 tons of gold this year alone, the highest in modern history. And silver's dual role as a safe haven and a critical industrial metal makes it one of the most compelling assets heading into 2026. Of course, mining is never without risk. Regulatory uncertainty in Latin America, permitting delays in Canada, and the US rising energy costs everywhere. But here's the twist. The companies that survive these headwinds often come out stronger. They're leaner, more efficient, and increasingly aligned with environmental and community standards. Margins are expanding, cash flow is solid, and valuations, still below historical price-to-net asset levels, suggest there's room to run if gold hits a 2750 facer. Next year, as JP Morgan predicts, mining equities could be one of 2026's most profitable corners of the market. So as investors look for stability in an unstable world, and miners rediscover the value of restraint and resilience, this may just be the start of a new golden age, not just for the metals, but for the men and women who mine them. I'm Rachel Cheshire, and this is Skillings Mining Review. Thanks for listening. And remember, every ounce has a story.